Well, as we come out of 24 and started to come into 25, certainly we could see challenges on the horizon for 25 as recently as December. I would say that we were looking at 25 and there was a lot of stress in the ag community. Markets were declining and we had some pretty good crops in our area, but it wasn't widespread. You could find holes, and so lower prices with not maybe record yields with high expenses going into 25, you could see the headwinds coming. Fortunately, one of the things that started a little bit of a turnaround in the attitude and even just the overall market was there was a continuing resolution signed at year end to keep the government funding. Within that continuing resolution, there was two very positive pieces for agriculture. One was the Ag Financial Relief Act, and there was over $10 billion that are going to be made out to farmers for the 24 crop year. And for our area of Northwest Ohio area, generally what you're going to be seeing is for every acre of corn that you planted, you're going to get over nearly $41 and change per acre for every acre planted in 24. For soybeans, it's going to be a little over $30 an acre for every acre of soybeans planted in 24 and $31 for wheat. That money should be coming out by March 20th, so should be out here at the tail end of February, mid part of March. And so that's a real shot in the arm to the ag community just to see the recognition that there are challenges in the farm economy. That along with another $20 billion that went to ag disaster relief. So we think of the disaster relief in the area of the Carolinas where timber, their timber industry is timber farming. They had a lot of disaster there. They're going to need funding there. Where the hurricane came up through the coast, destroyed pecan groves, things of that nature, they're going to get funding. But also in agriculture in our area where there was claims, where there was areas of drought, and there were certainly spots in Ohio that were far below normal yields, they're going to get funding. Now, how that's going to be given out or doled out has yet to be determined, but to know that there's that large sum of money and there's recognition at the federal level that, hey, there are headwinds and we need to help, that was encouraging. We mentioned those headwinds and those things that came about. Going into 25, it certainly would appear that margins are going to be tighter than they have been over the last several years. And so because of that, as you go out and you're starting to make decisions, it becomes, what is my return on investment? What is my cost of production? And I think knowing the cost of production is essential for every operation. Doesn't matter what you're doing with your crop insurance. If you're just buying crop insurance but you don't know if it's covering your cost of production or getting you close, you're only filling in part of the puzzle. You have to know that cost of production, really dive into the details, figure out where you're at, and then certainly I would say this year, maybe more than others, looking at the higher levels of crop insurance just to cover that risk is probably something that needs to be scrutinized and looked at in more detail and maybe given more consideration than it has in the past. Another positive change that we have had in crop insurance is the additional premium support. Some would call it subsidy, but I like premium support that has been put behind certain policies to help the American farmer. There's one policy type in particular called the Enhanced Coverage Option, or ECO, that will trigger at 95% of a county's yield or revenue. That is a very high trigger, and they put additional premium support so that the farmer is really only paying 35% of what it should cost for a very high trigger. It is something that a lot of operations should at least look at or consider. There are other private products that can be added to a traditional policy that can get you to 90% of your average, trend-adjusted average or 10-year average, which can help to mitigate that additional risk that we think we're seeing as we head into 25. Certainly one of the biggest things I think everybody's looking at in 25 is, will we get a new or updated farm bill? And it has been worked on for a considerable amount of time. They did a one-year continuation of the current farm bill that has kept it going through this fall. However, behind the scenes, there is a lot of work going on the Farm Bill, and there's recognition that there needs to be more help put towards the ag community. For example, reference prices on price loss coverage, or PLC, at the Farm Service Agency, they are maybe not keeping up with what the cost of production is. And yet there's a limit or a cap that was put on in the 2018 Farm Bill for how high those reference prices can go. So a new Farm Bill where it considers updating those reference prices or doing something different is more essential than ever. And we're seeing the need in Washington and around the country to help the farmer. It's less than 1% of the population, and yet it feeds, clothes, and fuels the American economy and the world economy. And so to see that there is recognition that we need an updated farm bill, a better farm bill that's enhanced, is encouraging to me. It isn't done yet, but the work that is going on encourages me to believe that we could see something here in 25. I do think there is encouraging things as we look to 25. For example, when I put together the meeting presentation for this winter, we were doing it at year end, and we were looking at the December corn contract in that 435 to 440 range. As we are talking here today, it's over 470. So there's been a general uptick, and that is encouraging as we're going into planting here in 25. You couple that with the potential for a ag financial relief payment coming in early to mid-March, that's also encouraging. And then you start to look at some of the markets where we're seeing some expansion of American agricultural products. One that just jumps to the front of my mind is aviation fuel. Aviation fuel is using corn ethanol. It looks to be a very expanding market, or potential for huge expansion. And as we're seeing that the carbon footprint want to bring that down, corn and agriculture are in a spot to help fill that void. So certainly there is challenges and headwinds, but there's also opportunities, and I think that's pretty encouraging as we're going into 25 and looking towards spring planting, that, hey, the markets are trending back up. That looks like we might have an opportunity, if you know your cost of production, to maybe lock in that cost of production or lock in coverage with your crop insurance to get you there, and then know that, well, it's not all doom and gloom. There are opportunities ahead. We just need to be ready, paying attention to take advantage of them. You know, as we prepare for 25, I think one of the most important things any farmer should do is to sit down with your crop insurance agent and really go over your coverages, go over them in detail. Make sure that your yields have been turned in for 24 so that you can get updated quotes, updated guarantees, and know where you're at, because the time to lock that crop insurance in on a federal level is drawing near. As we get into mid-March, it's going to be the time to have that locked in. However, there's a lot of opportunities beyond that. You can meet with your agent to talk about a hail insurance policy. You can meet with them to consider looking at things beyond crop insurance that can help. Even the election at the Farm Service Agency between Ark County or PLC, that date to sign up for that is April 15th. So you have some time there to consider that. And so it could be something where your agent can help with that. And I think that the most important thing you can do is take that time, take that opportunity to really sit down and focus, know your cost of production, and then know what all of the insurance options are that would fit best for your operation. You know, I've been doing this in the crop insurance industry now for going on 28 years, and certainly there have been challenging times in those 28 years. Going into 25, it has started out as one of those challenging times. But one of the things I think with agriculture, and especially as we're looking in our area of the country, the attitude of the folks in ag involved here gets through it. They've seen tough times, they know how to push the pencil to make things work, and we work through these things. I have no doubt that even though that times are a little tougher and the margins look a little tighter, the people that we're working with here are going to pay attention, they're going to fight hard, and they're going to work their way through this. You know, I keep mentioning the challenges of 25, but I do think there's opportunities, and I really think a lot of those opportunities are surrounding yourself with a network of folks that can help you and help your operation. Certainly, you look at your agronomist, your seed dealer, they're very important people, and they can help you. Looking at your crop insurance agent as somebody as a resource, but I think also very, very important in a challenging year like this is talking to your ag lender, and the folks at Citizens National Bank, they are focused on that. They are involved in agriculture. They want to know your operation, and they want to talk to you. You see higher interest rates and challenges, and how do I get through it? Again, it's communication. Having that trusted lender, that person at Citizens National Bank, your crop insurance agent, make them a part of your team. So it's not one person making that decision, but it's a group of experts helping you move your operation forward.